Nothing that we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Greetings, Algo artisans. It is 8:30 a.m. EST, and we have the Bitcoin sitting on the chart, holding at 90K, holding above 90K. And I think we might see it rotate around 90K, right? So you kind of see how we had that big move down last week, and then we had the Trump pump from Sunday morning, and then price retraced. And it just seems like a lot of just for the moment, the reverberations from all of that are starting to quiet down, and we're just getting a little bit of a technical market unfolding. So if this continues, you might see some kind of equilibrium reached in the high 80s, and then we'll see what happens. Maybe it heads back up or down. And if I had to take a look at the higher time frame, just to take a guess at which way the wind is blowing, I would say I think what I think will happen is that price will settle around 90, and then eventually, like I just drew, might get a little poke above, and then there might have to be a pull down because the higher time frame still has a bit of bearishness to get rid of. And I took a look yesterday at some of the past bull markets, and some of these pullbacks are a month or two at least long. So, we're looking at maybe until through April, we might see price kind of go sideways for a bit. And if that's the case, if some kind of equilibrium is reached on Bitcoin, whether it be, between 90,000 and 100,000, or whether it be between 80 and 90, or even 70 and 80, if Bitcoin can reach an equilibrium, right, then the altcoins might have a bit of their day. The altcoins might come out to play a bit. We might see a little bit of an alt party. And so if I zoom out here and I look at the daily chart, what makes the most sense to me is some kind of an equilibrium between 75,000 and 90,000, or maybe 80 and 90, or 70 and 80, something like that. But of course, we are in the bull market, and those pullbacks do not have to last that long, and we could actually see Bitcoin pop back up and go towards all-time highs before that. So we might see a longer pullback, or we might be towards the end of the pullback as we speak. As it stands, though, I don't think we're going to see Bitcoin reach all new highs until towards the end of the month, if not after that. But that remains to be seen, and the algos will tell us. For the moment, I expect sideways action. Now, we did just have the data come out from the European Summit, and the press conference, the ECB press conference, is going to be in about 10 minutes, 12 minutes from now. And for the moment, they didn't change their rate. So they're holding their rate steady at 2.65%, their prime rate. The forecast rate was 2.65 prior rate. Forgive me, they're not holding anything steady, they're cutting. Forgive me, I misspoke there. Prior rate 2.9, current rate 2.65. We had a bit of a cut. I guess that's a 25 basis point cut. So they did actually cut the rate, but it's what was expected. So what happened with the euro rate was probably already priced in. So if you take a look at the euro, the move was strongly up against the dollar, and that has to do, I think, more with dollar weakness than anything else. But in the most recent hours, you didn't really see a whole lot of action there. All the action with the euro was yesterday. So since this morning, it's just been kind of going sideways, going back to last night, really. Yesterday was a pretty wild day, though. The euro really went up against the dollar, and I'm going to attribute that more to the dollar going down against the euro. And that does, it begs an interesting question, right? And we'll take a look at why that's interesting in a second, but you can see it here against the pound as well, and the USD CHF being in the opposite direction, the USD getting weak against the Swiss franc, right? So really not doing what I thought it would do. But a lot of things have gone a little sideways this week. A lot of things went unexpectedly this week, and that was due to the news cycle and headline risk. And so, as we always say on Sundays, this is what the charts would do if nothing happens and a lot happened. So, and this is the great thing about trading, especially if you do have a very volatile time. It can be frustrating. Let's just say I had taken a trade based on this data, and I don't trade based on that data. That's just which way I think the wind is blowing. But had I taken some kind of trade on that data and then it flipped the other way, it's like, okay, there's a lot of volatility in this direction, and I'm going to go ahead and make some money. And I did. I scalped a little bit out of this move on the Swissy. No, that's not true. I scalped on the euro. I did the opposite. I scalped some money out of the euro. And the euro is effectively kind of almost an inverse Swissy, but it's a little different. So long story short, I want to talk about why that weak dollar is just something to think about, because the stock market itself is also headed down. And you don't usually see the stock market and the dollar heading down at the same time. Now, what you will see is the stock market heading down and the the JPY heading up. So most of the JPY pairs in the Forex world has JPY on the second half, the USD JPY, the GBP JPY. And so since stocks really pulled down, and this is a lot to do with tariffs, the JPY has gotten stronger. And like we talked about yesterday, the pair is USD. Oh, hold on a sec. The pair is USD JPY, right? So because the pair is USD JPY and JPY is on the second half of that, then that means that as the JPY gets stronger relative to JPY, the USD is going to get weaker and the chart will head down, right? That's why you have JPY getting strong, chart heading down. However, the USD seems to be getting weaker all on its own as well. And what usually happens in the stock market is as stocks get weak, money flows into the JPY, and that is because of the Japanese yen's placement in the world economy as a liquidity solution due to the carry trade. And that starts to get into an entirely different conversation, an entirely different class. Just understand that as the stocks go down, the JPY tends to get strong. Usually the dollar, money flows to the dollar at that time. But it does appear that perhaps money will flow to JPY and then will flow to the dollar and then will flow back into the stock market. So with the SP 500, we have price being held currently above, let's see, what do we got here? About 57.75. So it broke below 5,800 and price is flirting with breaking down below that. And it does appear that the plunge protection team has made some attempts at keeping price above throughout yesterday's trading session. So, we're going to see if they can do it today. And, it might not be the plunge protection team. It might just be the market trying to hold that up. But for the indices, I tend to go with the idea that it is the PPT. Now, I did expect stocks to head down naturally this week, but of course the tariff news did bring stocks down significantly, right? So I think the logic there is we put tariffs on, you see prices go up in the U.S., people's money doesn't go as far as it used to, and therefore less money goes into the market. And of course, you have companies in the U.S. that are building things and their items get more expensive. And so, people buy less of those. And that's why you see the price go down. I think that's the basics. There's probably a lot more to it than that. But as it stands right now, algorithmically, it does appear that there is more down to go. And a significant amount of down. We really could see a strong retracement of the stock market right now. And you know what? You got to make what is it? And I hate to quote, I think it's Stalin of all people. When you want to make an omelet, you got to break some eggs. I would expect to see price for the SP 500 stop falling, at least temporarily, at about 5,300. If we do get a continuous move down, I think we might get that down to 5,300. And if I'm not mistaken, I think Trump said that we might see a little bit of a disturbance during this time. Now, the tariffs, I believe, did get reversed, but the stock market still on its own, tariffs or not, are going to want to continue down. And so we'll see how this all goes. I think some of the tariffs got reversed. Some of them are still in play. I'm not following the news very closely. I look more at the charts than the news, and I really almost don't care. What the news says, because you don't know when the news is going to change. You have no idea when the headlines are going to come out. All you can do is rely on the charts. And then if you do have warning that the news is coming, then you can protect your positions or don't trade until it comes, which is why we use Forex Factory, right? We do know that these news items are coming. For example, the euro, all the euro data coming out. We did have the unemployment claims data come out already. So let me see if I can refresh the screen and get that data. It looks like the unemployment claims were lower than expected, so that's going to be a strong economy look, meaning that there were less jobs lost. So that would add strength to the dollar. In this case, it would be in the sense that okay, well, so it was good news is bad news kind of scenario, right? So let's go ahead and take a look at the Nasdaq because that's the one that really is going to reflect Bitcoin. And I know the interest right now is Bitcoin. So the NASDAQ tends to move ahead of Bitcoin. And right now, the NASDAQ, from an algo standpoint, just looks bearish. So I would not expect Bitcoin to have any tailwinds right now. If anything, it's going to have headwinds. And if the NASDAQ breaks down and continues down, I would expect Bitcoin to head down with it. The next level structurally I'd look at for the NASDAQ, the strong support would be at about 18,387, but that's a ways down, and we still have 19,920. Price has not broken below that. So for now, I don't know that it's going to break it this week. It could. You might see the NASDAQ go down and test 19,900 or so, 19,915 area. And if it does that, you might find Bitcoin getting some legs, and not legs, but some support, finding its feet, if you will. So we just got to keep an eye on all these things and trade as the market gives us our opportunities. I'm going to go ahead and move us over to the private live lab. So, we are pretty good at predicting price. When the market kind of fouls up our predictions, that's fine. We're not trading based on those predictions. We just have those predictions to know which way the wind might be blowing. And as the news gets into the markets, you get a lot of volatility. And this is a great time to be trading things like Forex because of the volatility. And yeah, the news is going to knock you out of your trades here and there. That's going to happen. It's not the end of the world. You just adapt and you take advantage of the volatility, because what's going to happen eventually is things are probably going to calm down. And traders are not really big fans of when things calm down. Traders want things to stay volatile because that's how we make our money. We live on volatility, right? So, take advantage of it. This is a great time to be trading, especially markets like Forex or the indices like you see here, the NASDAQ, the, SP 500, even the Dow. So anyway, come to algofactory.tech. We'll show you how we take advantage of that volatility, how we predict where price is going to go in the future, how we extract money from the markets. And if you come over to algofactory.tech, you can learn how to trade like a hedge fund pro. So in the meantime, don't forget,
join us or die.